They're popping up now.
Oh, yeah.
Good. Do I have to admit them? Okay. You start? Okay, great. Good afternoon, everybody. Thank you for joining us today. My name is Marinos here. I'm a principal at Norman Waterhouse Lawyers. I'm joined today by another principal of mine from Norman Waterhouse, Johanna Churchill from our commercial team. I'm also very grateful for Andrew Hurd from Phillips Librance, who's a registered liquidator and is here to also discuss some issues in relation to incorporated associations. We've already had a lot of interest from many people with respect to various questions. We'll try and get to some of those questions a bit later on. And so if you have any questions, please put them in the Q&A section and we'll try and get to them. For those that are relevant to this topic that we're talking about today, for those that go outside, we will endeavour to get back to those if possible. So just give us some time and we will get back to you. Today's my part of the presentation we'll be talking about the application of the Associations Incorporated Act with respect to incorporated associations. Obviously, this is governed by the South Australian legislation for non-for-profits who and they set up they have a separate legal identity to that of its members. Now, the incorporated association is its own entity where it can sue and be sued and enter into contracts or documents on behalf of the association. It's important to understand that this, the Associations Incorporated Act, is what basically governs any actions on behalf of the incorporated associations, and the Corporations Act is excluded to a large extent, but there are some sections that do apply, which I will discuss shortly. The so what I'm going to talk about is just some generic matters that you're probably all aware of, but it's good to have a bit of a refresher about. And a big issue that I've come across when preparing for this presentation is ensuring that an incorporated association has a constitution which incorporates all of the rules that govern it. Now, under the Act, it specifically sets out what's required to be within the constitution of the association. But what I've also found, and from my discussions within the communities, is that a lot of constitutions aren't revisited, and in particularly in light of COVID, what we have found is that some constitutions didn't have ways of dealing with meetings where the Constitution provides for having them to be face-to-face. Now, during COVID time, particularly from March, that would have been very difficult, if not impossible. So it's important that you revisit your constitution from time to time to ensure that it encapsulates everything that you need, especially with the moving feast of COVID. So just keep that in mind. And it's very easy to amend your constitution. It can be done by way of a special resolution, but please ensure that you notify the Commission once that's done within 1 month. The next, although there are several points that need to be incorporated within the rules, the main one I want to focus on are the objects. Now, the objects set out that basically the key reason as to why the association exists. It's important that an association does not go beyond those objects. Otherwise, they could be in breach of their constitution. And then any breaches of the Constitution could either be dealt with internally in accordance with the rules of the association or either civilly. The Commission will only really deal with serious breaches such as failure to provide financials or failure to keep minutes. So just keep that in mind if you need to revisit and change anything in your Constitution. The next sort of simple thing that you probably all are aware of, but I think, again, it's important to set out is that the committee of the association needs to incorporate these people, which include a public officer, a chair, a secretary, a treasurer, and committee members. Now, in terms of members, they can be, as described in the rules of the association, can be a person or a body. And with respect to an officer, that can be any person who occupies or acts in the position of a member of the committee of the association, is a secretary, treasurer, or public officer of the association, or is concerned or takes part with the management of the affairs of the association. Just my last point in the slide there about having a public officer, that if an association does not have one, it could be liable for a breach of the Act under Section 56, but I will delve more into that in my next slides. Now, this is a bit of a snapshot of the offences that we've located in the Act. It's not conclusive of all the offences, but I just thought these ones are the ones that should be highlighted for your purposes, so you can fully understand obligations and requirements. So in terms of these sections, any person, not just an officer of an association, must comply with these sections of the Act. Now, the first one is a failure to disclose a conflict of interest. This arises with respect to the incorporated association entering into contracts. Conflict of interest may arise, for example, if there's a public officer who has a company and the association is going to enter into a contract with them where they're going to get a significant advantage or benefit, and they haven't disclosed that, they could be in breach of this section. If you do have a conflict of interest, you must not vote on the contract at the committee meeting in order to avoid the penalty of $5,000. Importantly, there are also defences for this, and I've noticed it's quite a generic defence throughout the Act, and that is that any breach was not intentional. So it's hard to see how you wouldn't know that you have an interest in a company, but there are all types of different conflicts of interest that people may not be aware of. The next one is accounts to be kept. So a prescribed association, if its gross receipts are over $200,000 or as prescribed under the regulations, they are required to prepare financials and have them audited. It's important with respect to the auditing of the financials that they can't be undertaken by an officer, partner, employer, or employee of an officer, as well as an employee or a partner or employee of an employee, as that's how it's described under the Act. So just being sure that there is some sort of independence with respect to the auditing. And I think Andrew might be dealing with a bit with the auditing side of things, but that's just a requirement. Again, the defence here again for any breach of this section is that it wasn't intentional. And if you don't get up on that defence, then you're at risk of a $5,000 fine. The next one is the issuing of false or misleading disclosure statements. As you all know, the disclosure statement will incorporate all of the fees paid by the members or any kind of contributions by the members. And if there's been approval from the Commission, then non-members can also contribute monies. Now, in terms of this section, it's ensure that you must have a proper record of all of these monies that are paid in. There is a defence, and that is that if the breach was immaterial, or that there was reasonable grounds that they didn't believe that it was false with respect to any errors in the disclosure statement. Again, any breach of this section could lead to a penalty of $5,000. The next one is the public officer. That's what I mentioned previously. It's important every association must have a public officer. And if they don't have one for greater than a month, then they are at risk of being in breach of this section. Also, any updates to the identity or details of the public officer must be notified to the Commission. Again, could be liable for a breach of this section if that doesn't occur. And something that I found very interesting is that a public officer must be a resident of South Australia. So just make sure that all those details are incorporated there. There is a defence again, but there's a bit more detail to this defence, and that is that the matters against the association didn't arise from any failure by the association to exercise any proper diligence. So again, if there's some sort of omission by that, without any sort of malice, you could get up on that defence. Again, if you breach this section, then it could be liable for a small fine there. The next one is misrepresentation. Now, this is by anybody who gains an advantage by falsely representing that a body is an incorporated association when in fact it is not. Again, the defence here is that there was no intention of doing that. People may get confused between a corporation and an incorporated association. So that's the defence they may raise. Again, if you don't get up on that, you may be liable for a $5,000 fine. Now, the final one is Section 61. That's oppressive or unreasonable acts. This is sort of taken from the Corporation Act with respect to shareholders' actions or directors. Now, in terms of the corporate association, any current or former member can bring an action under this section, and they would apply to the Supreme Court or Magistrates Court on the basis that the association has engaged or proposes to engage in conduct that is oppressive or unreasonable. Importantly, if a former member is going to bring an action under this section, they must do it within 6 months of cessation of being a member. Now, if the court is satisfied that you've engaged in this sort of conduct, they can make a wide range of orders, which include the winding up of the organisation. They can restrain people from doing certain acts. They can alter the constitution of the association, and former members can be restrained. Again, this is their defence here is that there was no intention and that the court will determine the reasonable penalty. The next one, importantly for officers, it's important that they always act in the best interest of the incorporated association, and their primary responsibility is to ensure that the association complies with their statutory and reporting obligations. Certain breaches of these duties under the Act and generally for their fiduciary duties include doing an act with the intent to deceive or defraud the association or other persons for a fraudulent purpose. They make improper use of their position to gain a personal advantage to the detriment of the association. And then the final one is that they must act, if they don't act with reasonable care and diligence in exercising powers and discharging their duties. If they are in breach of any of these sections, they could be liable to the association for any profit they've gained by breaching these sections or any damages suffered by the association. Now, in light of COVID, winding ups of an incorporated association, I thought I would touch on, in particular, given the fact that when COVID hit Australia in March, the government was quick to amend the Corporations Act to protect companies that, so for corporations that are governed by the Corporations Act, if they owed money, because a lot of businesses were on hard times as they were basically shut down. Those changes resulted in, generally, if a statutory demand was issued prior to COVID, all you needed was a debt that was $2,000, and you had 21 days to pay once you were served with a statutory demand. The government for corporations extended will change that operation by saying that the debt needed to be $20,000, and then once the demand was served, the corporation had 6 months to pay. That was a big sigh of relief for a lot of the creditors, which I'm sure Andrew will be able to touch on a little bit more. So that started on the 24th of March and was supposed to end on the 25th of September. The government has now extended that to the 31st of December and are currently considering other arrangements to assist these creditors. In my view, I think it may very well continue until March or April, but Andrew would know a bit more. He's on some boards that he has a bit of intel as to that, perhaps. But what the sad thing is for incorporated associations, and from our research, it doesn't appear as though the Associations Incorporated Act has been amended just like the Corporation Act has. For example, if you see at the bottom there, under section 41.4, if a creditor has a debt exceeding $1,000, they can serve a demand on the incorporated association and demand that they pay that amount within 3 weeks. And if they don't, then they could apply to the Supreme Court and have them wound up. So there's no extension, like they haven't increased the amount or they haven't extended the time for payment, which is a bit unfair for incorporated associations as far as I'm concerned. So, but having said that, not only is that a way to wind up an incorporated association, which is when they're unable to pay their debts, there are other ways an incorporated association can be wound up, and that includes by way of a special resolution. If the association has not yet commenced any activity or function more than 1 year elapsed since its incorporation, as I mentioned before, unable to pay its debts. The members of the committee have acted in the affairs of the association in their own interests. That would, and then there's their next category, which is if they've conducted it in a manner that is oppressive or unfairly prejudicial. And that would really fall into the category potentially where they have tried to remove a member without being in accordance with the rules of the association, or trying to, for some ulterior purpose, as it is the case under the Corporations Act. And then there's the just and equitable issue as well. Now, this could be in the case if the Constitution, and this is why it's important to revisit your Constitution, if it doesn't deal with how you can deal with a deadlock of the committee, which I'll be surprised if they don't, but if they don't, then you may apply to the court and seek an order for the winding up if there's a deadlock and no decisions can be made for the incorporated association. Now, so I just have to go back a slide, there's a mix-up, but as I said before, once an incorporated association has been wound up in any particular fashion, the gentleman on my right here, Mr. Hurd, will come in and oversee things, and as a liquidator will look into all the transactions on behalf of the incorporated association. Now, I mentioned before that the Corporation Act doesn't necessarily apply to incorporated associations, but it does apply in certain circumstances, and I do have another slide next that shows that. But what I want to talk about, what's particularly important for incorporated associations once they're wound up, are the voidable transactions under the Corporation Act that apply. And the two ones that I really want to do is the uncommercial transactions and the unfair preferences. Now, uncommercial transactions, they relate to transactions where the association may, or a person, where it may be expected that a reasonable person in the incorporated association's position wouldn't have entered into that transaction by having regard to the benefits and the detriments of that transaction. Now, an example of this is that if an incorporated association release a debt for no consideration, or they sell assets for undervalue. So if they've got all brand new Sharons for about 20 of those and they sell them for $10 each when they're really worth $150, so that may be seen as an uncommercial transaction, and which Mr. Hurd would come after that sort of transaction. Importantly, it's not only just a couple of months prior to the liquidation. These transactions can be looked back between 4 to 10 years. It just depends on the type of transaction that's been entered into. The other one, which we like to prosecute on behalf of liquidators, is the unfair preferences. That occurs when if a debtor prior to the association going under receives a payment for its debt in circumstances where it probably ought to have known that the association was insolvent. So what Mr. Hurd could do, he could, as of the date of the winding up, he looks back 6 months, which is the relation back day period, and we'll see if any of those transactions have occurred and try and claw back those monies for the association and its creditors. So they're the kind of provisions, helpful provisions that the Corporation Act applies to incorporated associations in during the winding up. So as I mentioned before, these are the relevant sections of the Corporations Act that do apply to incorporated associations, but I've really only dealt with Part 5.7b as I thought that's the most relevant point for this presentation. Now, one of the last final slides I'll be talking about is certain offences that apply to people within the incorporated association once the association is wound up. And the first one is, and it's quite a long and laborious section, but it really deals with by officers and former officers for failing to disclose or deliver up property or documents of the association to the liquidator. There are exceptions, of course, if the property is being disposed of appropriately in accordance with the rules. But under this section, there are certain provisions that deal with quite prescriptively what officers and former officers should be aware of once the company goes into liquidation and their responsibilities or even liabilities if they don't comply. And they include within 5 years of the date of the winding up of the incorporated association or any time thereafter, if all property isn't delivered up to the liquidator and they fraudulently remove or conceal any assets worth over $100. If they conceal debts is another issue. They fraudulently make any material omission in a statement relating to the affairs of the association. But they parted with or have made an omission or they're privy to the fraudulent parting with, altering or omission in a document that's produced to the liquidator. They engage in a false representation to obtain credit for the association whereby that hasn't been paid for and property has been acquired. They fraudulently pawned, pledged, disposed of property of the association, obtained on credit and not paid for. As I said, this is quite a laborious section, but the next ones are knowing, believing that a false debt has been proved by a person and fails within 1 month to inform the liquidator. Prevents the production of documents being produced to the liquidator. And then again, for that same period, as I mentioned before, which is the 5 years before the winding up or any time thereafter, has attempted to account for the association's property by making false entries in the association's documents, or has been guilty of any false representation or other fraud for the purpose of obtaining consent of the association's creditors or any of them to an agreement relating to the association or the winding up. If you've committed any of these breaches, you could be liable for a $10,000 fine or 2 years imprisonment. Seems quite harsh, but nevertheless, they're there. Again, you may be able to rely upon the general defence of that it wasn't intentional. The next one I want to discuss is the 49AC, which is failure to keep proper records. Now, the member of the committee of the association, they must keep proper records, which must be produced to the liquidator. If they fail to do that, they could be in breach of this section. Now, the defence here is if they believe that a person who was in charge of undertaking that role had actually complied and was in accordance with the Act to produce those records, that may be the defence. But if they don't get up on that defence, they could be liable to a $5,000 fine or 1 year imprisonment. The next one is the incurring debts not likely to be paid. This applies to a person who was a member or took part in the management of the association. They must ensure that they don't incur debts or when the association can't actually pay for them. Now, the defence is, again, that this wasn't done intentionally, and if you're not successful in that defence, you could be liable for a $5,000 fine or $5,000 to $10,000 fine or 1 to 2 year imprisonment. Again, that seems very harsh, but nevertheless, Mr. Heard may think differently.
We'll talk about solvency.
Yeah, we'll talk about that. That's right. Andrew's going to help you around that so no one gets in trouble with this. And then fraud by officers. This is when they induce someone to give credit or an officer with an intent to defraud causes to make any gift or transfer levying against the property of the association. Again, the defence is that this wasn't intentional, but if you don't get up on that defence, you could be liable for a $10,000 fine or 2 years imprisonment.
It'd be fair to say, Vas, all of those provisions can really be summed up in acknowledging that it's not your asset, it's the association's asset. Deal appropriately with the asset. If you ended up in liquidation, deal appropriately with the liquidator, and then you've got nothing to worry about, because there are, as you pointed out, a raft of ways that you can be found liable. So.
Absolutely, yeah. Just if the liquidator says, "Where's this?" you say, "Here it is," and make sure that there are no breaches of this section, because there are. To my surprise, there were quite extensive repercussions for any of these breaches, which may be actually unintentional, but which you could rely on that defence, but they're quite severe.
Indeed.
So as I mentioned before, the main defences for any of these breaches is that there was no intention, or it didn't result from any failure on the part of the person to take reasonable care to avoid the commission of the offence. And then one last thing I'd like to touch on that I've spoken to Johanna about is under the Corporations Act, there are safe harbour provisions whereby if the company is trying to undertake a course that would lead to a better result for the company rather than the company going into liquidation or administration, there are certain protections for those involved in the company, and particularly for the directors. Unfortunately, that isn't applicable to incorporated associations. So I think the state government may want to think about doing some of those changes for this act here. So, and the final one, just in light of COVID, I thought it was important to touch on the work health and safety, and in light of some of the questions that have come through. An incorporated association is a separate person for the purposes of the WHS laws, and they could be found guilty for any breaches. Therefore, it's important that you understand that association can be held liable for any breaches of its officers, employees, or members. Of course, the regulator can prosecute the association or personally prosecute the officers or the members. So please ensure that you're up to date with your WHS laws. And if you're unsure about this, there are training courses through Safe Work SA, or of course you can speak to the great people here at Norman Waterhouse about these regulations that may be able to ensure that you comply so you don't breach anything. But this is all important now, given COVID. You don't want anyone to be in breach of these sections. So just my final comments. It's really just, as Andrew has rightly pointed out, just to be diligent and careful, and to ensure that you're aware of all your obligations and rights under the Act, and that in particular in light of the financial situations, that debts aren't incurred when the association can't pay for them. And so it's important for everyone to be aware of the cash flow, in particular those who are paying or incurring those debts, because it's important that incorporated associations, who are the lifeblood through local government communities, remain and continue. So that's all from me. I'm going to pass you on to Johanna Churchill.
Thank you, Vas. I've had Vas do all the heavy lifting today. I promise I'm not going to mention any sections of the Associations and Corporations Act. I just wanted to give you my 5 top tips, and these are tips for board members of an incorporated association that I would give at any time, but they're particularly important at a time when associations might be having more financial difficulty than they would have normally, and so it's worth just having a reminder of them today. Oh, next, bear with me. Can someone just yeah. Nope.
You need to click off of it.
So my first tip is to make sure that we've got the right people on the board. Excuse me, I'll just take control here. Now, being on the board of an association, even if it's just a small community organisation, is still a responsibility. So gone are the days that people should nominate themselves on a board for just the, for kudos, personal kudos. It's actually a personal risk, and it should be taken seriously. And conversely, people shouldn't be appointed to the board on the basis of them just being popular with members. Ideally, people should be appointed to the board for their skills and expertise, and across a board or a committee, they're the same. They're the same thing essentially. You should make sure that there's a reasonable spread of expertise, even for a small organisation. The board members should regularly be refreshed. As I said, it's not a personality contest, and just because you've been a long-standing supporter of the board, maybe you need to think about stepping down and letting some other people with more relevant expertise take on responsibility. The Constitution can be a bit of a challenge in this area, because quite often constitutions require board members to be nominated from amongst the membership and voted on at an annual general meeting. Increasingly, we are being asked to update constitutions to provide, for example, if there's 7 or 8 people on the board, that only 5 or 6 or 7 of them get elected by the members at a general meeting, and that the board be able to appoint, a handful of positions based on what they think works with the skills matrix. And that's where you can have mechanisms to ensure, for example, that there's someone on the board who's got, a high degree of financial literacy, or someone who's got a legal or a governance background. So this, I think, is a real challenge for getting the right people on the board if you just rely on the process of having nominations and elections from members. So that's a bit of food for thought. When you do have people appointed to the board, it's good if they could hit the ground running. So it'd be good to have an induction process for new board members, where you would give them a copy of the Constitution, and a list of all the employees or volunteers with the association and what they do. Copy of any important contracts. If there's a community has association has a contract with a local council to run some facilities or anything like that, a new board member might want to have a look at that. And I would also, consider providing minutes of meeting and board papers for perhaps the last 3 to 6 months before the person's appointed, so that they can start contributing from day one and not spend the first 12 months working out where the association's up to. A induction pack should also include things like a copy of the association's insurance policies, so that a board member can see that the association is managing its risks properly. Second tip, I think this is a bit of alluded to by Vass earlier, is making sure that the Constitution serves its purpose. It should set out the objects or purposes of the association. Vass has already mentioned that. And it should also set out what the powers of the associations are. So a purpose and objects are really the reason for being for the association. And those objects or purposes need to fit with what's allowed under the Associations and Corporations Act. And the powers are how the association goes about doing that. And you might see in some constitutions a very long list of powers. What we actually prefer to do is have a very short and general statement that the association can do anything that the board considers appropriate or necessary for pursuing the purposes and objects. And it's really important to get that right, first of all, because associations can only be incorporated for limited purposes under the Act. But also, if you go outside those objects or those powers, then the board members or committee members are actually personally exposed. So make sure that the powers and the purposes are set out, that they're adequate, and that they actually reflect what the association is doing. I have seen situations where, from the Constitution, it looks like the association is a completely different organisation from the one that actually carries out the activities. So have a look at that. The Constitution should be modern and up to date, and Vass has already made mention of things like making sure that you can have meetings using technology. recently, those kinds of provisions have really only applied to board meetings, but in a COVID environment, you might want to extend that to having members attend meetings by Zoom, etc. And some of these provisions are actually in the Corporations Act, but they're not in the Associations and Corporations Act, so they don't apply to associations. So really, the Constitution needs to do some heavy lifting around these sorts of processes and procedures. The Constitution should comply with the law. Quite often I see particularly provisions about meetings and voting on elections of members, and also conflict of interest provisions in Constitution, which just run foul of the law. And that's fine until there's a dispute about something, and then suddenly there's a big problem if the Constitution actually contradicts what the law is. Constitutions should also provide an effective framework for nominating and electing board members. There should be a proper process for nominations of board members. There should be some criteria about who's entitled to nominate. There should be a proper process for election of board members, whether there's a contest in that election or whether there's not a contest. And where there's not a contest, and that's a situation where you have candidates, the number of candidates for election don't exceed the number of vacant positions, you should still have the members approve those candidates for election, and not just have the chairperson declare those people elected purely on the basis that they've made a nomination. That's one of the examples of provisions which are contrary to the law. There should also be provisions dealing with delegations by the board. At law, it's the board that makes all decisions, except to the extent that decisions are delegated to an employee, such as a CEO or a manager, or to a subcommittee. That needs to be a clear framework for that. One of the things that the board would need to consider is whether there's any terms of reference required. Delegations should be properly minuted in the minutes of meeting, and very clear about what an employee or a subcommittee can and can't do. If a committee is going to be around for a long time, which you have with standing committees like a finance or governance committee, then you should have those terms of reference regularly reviewed. If it's an ad hoc committee that might only be in place, for a year or two, like a centenary or a celebration committee for some big event, then that's less important. But it should be clear that perhaps there's a board member on those committees, and that there be regular reporting to the board by those committees. So that framework should be set out in the Constitution. We should be clear about whether there's proxies can take part in general meetings, and if there is going to be arrangements for proxies, then we need to make it clear about when that proxy form, what that proxy form should look like, when should it be provided, what the rights of the proxy holder are. Is it just to vote, or can they be voted in counted in a quorum? Can they join in a call for an adjournment or a poll? All of that should be set out in the Constitution. There should also be mechanisms to allow the chairperson to effectively control a meeting, to eject a member or anyone else who's being unruly or causing a disturbance, and to resolve any disputes about the validity of someone's proxy or validity of someone's voting. And otherwise, the Constitution should meet the best practice for governance standards. And it's really important in an association, because an association, our Act's not sophisticated, unlike the Corporations Act. It isn't changed and updated as regularly as the Corporations Act does. So it is important that the Constitution has all the bells and whistles that are required. The association also should have a deed of access and indemnity between the board or committee members and the association, which should require the directors' and officers' insurance be carried out by the association, that indemnifies the board or committee members for any claims which might be brought against them in relation to their position, to the extent that's permitted by law. Obviously, there's a limit to how why these indemnities can be given. They obviously can't be given to protect a committee member from fraud or for any claims that the association may have against the committee member from the types of things that Vas was talking about earlier on. And it should also allow the board members or the committee members access to the records of the association should they need to defend or bring a claim to protect themselves. And these arrangements should be in place for at least 7 years from the date the board member ceases to hold office. And the reason for that is that under the Statute of Limitations Act, any person who's got a claim has at least 7 years for most kinds of claims to issue proceedings. So it's handy to have these deeds of access and indemnity, and we would recommend that they be entered into, or failing that there be an attempt to cover these kinds of things in the association's constitution. These deeds of access indemnity should be backed up by the insurance, directors and officers insurance. We recommend that there be at least $10 million cover for directors and officers insurance. I know that that's expensive, but there normally would be covered in a package. So I was looking for the package bullet point, but they're packaged up with other insurances, public liability and other insurance, then they can usually be attained fairly cost effectively. Once again, the insurance, like the indemnity, won't cover things like fraud or willful breach of duty by an office holder, and that insurance should be maintained for 7 years after a committee member ceases to hold office. Lastly, the association should make sure that it doesn't carry on activities outside South Australia or sell goods or services which are not related to its objects, or sell goods or services to non-members where those substantial in number of value, unless it's restructured to a company under the Corporations Act. And that's simply because the Associations and Corporations Act is a South Australian Act. It only protects committee members for activities carried on inside South Australia. It doesn't protect them from anything they do outside South Australia, and that might be a particular concern for some associations that are down the southeast near the border. It's not intended to be a vehicle for carrying on a business, so associations shouldn't be selling goods or services unless, an example would be we had a disability organisation that was providing employment services, and as part of that employment of people with disabilities, they were making goods and selling them. So those sorts of supported employment programs are exempt because the sale of the goods and services are related to the objects, providing job opportunities for people with disabilities. And selling goods or services substantial in number or value to non-members. So yes, sure, your football club can have a bar and it can serve a beer to a non-member who's attending, as long as most of the sales of its pies and beers are to its members, which usually is okay. But if you do any of these things with any degree of regularity, you really ought to consider restructuring to a company under the Corporations Act. And I think that is it for the lawyers here, at least. So here's the legal disclaimer. But look, just obviously, this is all very general. So if you have any specific questions, feel free to contact us directly. So I think that's enough from the lawyers. I'll hand over to Andrew.
Thank you, Johanna and Vas. I'll try to work through a reasonable number of slides reasonably quickly. It's been a tremendous year of change for many clubs and associations, and those of you that are on the webinar will probably be experiencing that at the moment. And in July, not long after COVID became upon us, the Australian Sports Foundation conducted a bit of a survey. to find out what is the potential need of businesses. Now, you'll see in the disclaimer at the bottom that the numbers responding to that survey in South Australia were quite not low. But what I just wanted to make the initial point on this in this slide is that if you're feeling a little bit tight with your money and have some concerns with respect to how you're going to work through the difficulties in managing your finances, you're not alone. It is an experience that is occurring nationally as a result of the COVID circumstances that we've all been through. Now, obviously, there are both financial and non-financial implications of the impact of COVID on clubs. Excuse me. I might need that.
Yep.
Oh, but excuse me. Sorry about that.
I'll give you my glass, Ben. COVID times I couldn't give it.
Probably can't.
Couldn't share it.
So there are obviously both financial and non-financial impacts of COVID. My presentation is going to focus predominantly on the financial impacts, but that's not to say some of the non-financial aspects of managing trainings and social spaces and the workplace health and safety mechanisms that will have needed to have been employed to ensure that food and beverage services, etc., are adequate, have been of no less a challenge than the financial challenges that you'll need to go through. Thanks, Miss. And I apologise for my. Now, COVID, as we know, started in around about March, mid-March, and we're now towards the end of October. So there has been quite some time that has existed between getting used to the circumstances, and as we gratefully know, South Australia is in a much better place than other states are. So there are some learnings that we can draw upon as to how we can cope with the financial implications that still exist, though, in clubs and associations. And that might be, if you're a cricket club, go and talk to the football club that occupies the same land and share some of those learnings. Clearly, sponsorship and fundraising challenges will remain significant challenges, certainly for the next 12 months, I would have thought. And I know that there are businesses that do want to keep supporting clubs with their sponsorship monies, etc. But it's going to be up upon you as the members of your clubs and associations to try to really make sure that you can demonstrate the value that sponsorship dollar will be able to be delivered to try to lever those important sponsorship monies into your organisation. Your members, your players are potential customers to your sponsors. So think about that in the way that you're approaching your potential sponsors. For example, the football club that my daughter plays at, the Rams, they have substantially increased this year their social media presence. And there are very, very regular updates on Instagram, Facebook, etc., talking about aspects that are happening in the club and tying in some reference to a club sponsor. So every time that I look at Instagram and see the coach for next year that has just been announced, for example, there will be an acknowledgement of one of the key sponsors of the club. And that's a way that you as a club can demonstrate that you'll be exposing those businesses to the membership and delivering real value. So it's finding a way for the club to connect in a meaningful way. I know that some social functions will become a little bit more awkward to implement, and a lot of, certainly through the football club season, the winter season, many social events that have been the backbone of fundraising weren't able to be achieved. It is getting a little bit easier, but not as easy as it would have been last year. Match days are obviously impacted as well. We have COVID marshals that are making sure that the people aren't standing too close to each other. So those natural sorts of revenue items that come through on game day are somewhat depressed. So the gate takings, the player payments, maybe the food and beverage sales that would occur, the merchandise sales that might occur, all of those aspects really have their own challenges to face. And you will have club members and players that will be impacted. They may still be out of work at the moment due to the circumstances of their employers, and they may be struggling to meet their sub fees. Your players, your members are the lifeblood of your organisations, and you need to try to find a way where it's still possible to keep those players and members engaged so when circumstances permit, when they're back in work and better place, they can resume their normal productive involvement with the club, and you've not lost a great member or a great player through the unfortunate circumstances of COVID. Now, this slide talks about some of the expenditure impacts of COVID and the income and revenue aspects of COVID that we're going to be talking about over the past and future slides are really central to an understanding of whether or not an organisation can remain solvent. And solvency is, can you pay your debts as and when they fall due? And we want to, through this presentation, to give you as many tips as possible as how you can work through those financial circumstances when they're getting close, so that they're not, when the solvency aspects are getting closer, they don't become terminal, and that your club or association doesn't become an insolvency statistic of this black swan event being COVID. But before I turn to that in much more detail, I would like to quickly turn to some basic governance, financial governance matters for clubs and associations. As a committee member of a club or an association without perhaps detailed financial acumen, I know it's sometimes concerning as to know what sort of questions do you need to ask in order to discharge your duties and responsibilities on that committee. From a financial perspective, every committee member needs to ask questions sufficient to enable them to determine whether or not the club or association that they're on is solvent. That is, can the club or association pay its debts as and when they fall due? So there are questions that should be asked at every meeting, and at every committee meeting, there should be a financial report that is tabled before you. Therefore, the key documents and questions that you will need to ask for are as follows. At the start of every year or season, that I would like you to make sure that there is a cash flow budget, that it is prepared monthly for the period of time going forward for your that's relevant to your association, showing the anticipated cash receipts and the expected cash payments, reconciling to a balance in the bank account that is within the limits that your facilities may have. Now, most clubs and associations wouldn't run an overdraft, so you would always want to make sure that there was money in the bank account after accounting for these monthly receipts and payments. This document, your cash flow statement, is going to be your Bible. It's going to be the document that I would like you to reconcile to at every meeting when you see these financial statements. And I'll give you the questions to ask about that. I sit on a number of boards, and when we have these sorts of questions, I make a somewhat flippant, potentially response to say to people, profit is for vanity, cash flow is for sanity. As a liquidator, I deal with the world of people that can't pay their debts as and when they fall due. So maybe that's why I have that clear bias towards cash flow as being your number one decider for business decisions. So after you attend, you've got your initial budget, and then at every meeting thereafter, you'd want to know or see or have explained to you the answers to the following questions. How much money do we have in the bank account? Well, that's going to be in a balance sheet that should be given to you under a notice called, or a line item called bank account. But you would also want to see a bank reconciliation statement. So the treasurer should produce a balance sheet and a bank reconciliation statement. The reconciliation statement is really important to you because it reconciles the balance that's shown on the balance sheet to the balance that might be on your bank statement that your Bank SA might have given to you. The difference could be cheques not presented or deposits not received, and you wouldn't want to just rely on the balance sheet by itself because that figure may be misleading. I'd also encourage you to be asking, how many creditors do we owe? So creditors would be bills that have incurred. You know, we might have had to buy those Sharon footballs that Vass talked about before, but you haven't as yet paid, Rebel Sport for those footballs, but you will next month. So those sorts of people are creditors, and you want to know, well, how many do we owe? Who do we owe as creditors? So you can do that sum in your mind. We've got $10,000 in the bank account. We owe $1,000 of the footy. Okay, we should be able to pay those footies next month. Fabulous. Then asking the questions, what further revenues are we expecting and what further expenses will enable you to reconcile your point that at October, on that cash flow budget that was presented at the start of the meeting, we should have $9,000 in the bank account, and the balance sheet says we've got that. Okay, we're going on track. You would want to be asking more questions if you had expected at the end of October to have $9,000 in the bank account and you have $1,000 in the bank account. That's when you really need to say, Mr. Treasurer, Mrs. Treasurer, you've prepared this document. What's it saying to me, because I don't understand? Asking those questions will help you fulfil your duties as an officer of the organisation in terms of are you sufficiently aware of the financial circumstances of your club or association. Vass talked about should your accounts be audited. There are a three-phase answer to that question. Certainly, larger clubs, depending on turnover, it is prescribed that your accounts need to be audited. But your constitution may also decree that your accounts should be audited. But as a matter of prudence, it is probably a good reconciliation at the end of the year to think about having your accounts audited. Now, that doesn't mean you need a Big Four accounting firm to do your audit if you're just the local hockey club, but it might be that you can get your local accountant to go through and give you that certification that the receipts and payments can be accounted for. Along the bottom of the slide there's a very long URL that I wouldn't mind you just having a notice of. That was a fabulous resource that I would, and it is dated 2017. It's a few years old, but I would recommend that those of you on this webinar think about clicking onto that hyperlink and seeing what is in essence a far more expanded version of what I've highlighted just now. We're running a little tight on time, so I'm going to skip rather quickly through this introductory slide. This is essentially the 6 stages of how a business goes about restructuring, and I'm going to go on the subsequent slides to that. And it's going to be as relevant to you if you're BHP or the Burnside Dance Club, the BDC. So it is a simple process that can be replicated in your club or your association, or if you're a business proprietor in your own business, to work your way through solving a financial crisis. Solving a financial crisis always starts with understanding the magnitude of the crisis that needs to be overcome. So it starts with not having a full appreciation of who the liabilities are owed to. I've highlighted in this slide some of the key liabilities that would exist in most organisations. And if you're uncertain at any particular point in time, or it's the start of a new accounting period or a new season, and you have a new treasurer, or you just are a little uncertain as to, well, do we know all the liabilities that are outstanding? I would suggest you maybe go back and look at the last 12 months income and expenditure and say, okay, well, who did we pay rent to? Okay, yep, they're on the list. We've got them in the budget, and ask all those sorts of questions. Who do we pay power to? Who do we get our insurances through? Who did we buy our uniforms through, et cetera, to make sure that you can see in the records, we've cleared off last year's account, so we do or don't have liabilities going forward. Having an appreciation of the completeness of your liabilities will give you an understanding of the debts and obligations that your cash flow needs to be able to respond to. Then the resources that you have available to you. Well, we've talked about the cash at bank being the most critical resource that's available to you, but there are other resources that clubs will have available to them. So subscriptions, etc., might come through the year. Sponsorship may be fed in through the year, and you'll have due expectation dates that those sorts of payments will be coming through. And they're the sorts of things that you're trying to match up with your commitments to payments going out, balancing into your expectation of revenue items coming in. There are a range of government funds that are from time to time offered. I'm unaware of any current working capital funds that are available for clubs and associations to call upon, but I would constantly, or would ask you or recommend you to constantly look at websites such as the website I referred to on the previous URL to see what grants may be available to you, and the Australian Sports Foundation website. Have a look at that. Once you've got an idea of where your resources are and what the obligations are that are owed against it, you'll have an initial impression over whether the problem you're surmounting is insurmountable or not. Let's work through on the assumption that the liabilities you've identified are going to be managed, but it's going to take a little bit of work to get your cash flows lined up. So to start that process, you need to be able to stabilise your current situation. So that starts with having a clear understanding of what's the now. And you need to start to buy some time to work through your problems with your creditors. Now, Vas highlighted before that with respect to associations, your creditors can press for a winding up of your association ever so much more easily than the corporate cousins can at the moment, because the government restrictions to the issue of statutory demands is much higher in government in companies at the moment for associations. But it starts with the conversation. You need to find out who your stakeholders are. And this is a ruthless thing I'm about to say to you, but when you look at your stakeholders, your counterparties that you have to deal with in your business, you're going to say, which of those people that I owe money to, which of those counterparties are absolutely critical to my organisation continuing on? They're the important ones you have to look after. There will probably be a subset of those stakeholders that if they ceased supplying you with Cokes for the canteen, they're not important because you can probably get Cokes from another canteen or another supplier, using that as an example. And you'll therefore have a list of important, it's a nasty word to say, important stakeholders and non-important stakeholders. And you're really going to have to preserve your cash flow, firstly, to deal with those important stakeholders, because they're the stakeholders that could bring the end to your business, your association's activities. Then you'll ration your cash out to deal with those stakeholders and start to work through cash generation strategies. Now, we've talked about where those come from sponsorship monies, from subscriptions, game day payments, canteen receipts and so forth, but also have a critical look at what your balance sheet has on it, because there may in fact be last year's merchandise that is still sitting there. The Rams Footy Club, for example, at the end of this year, they had a total clearance sale of all their leftover merchandise, because next year it'll probably have another sponsor's name on the back than on this year. So get rid of your stock. Don't remember what I mentioned before. Cash flow is your main priority. Having stock sitting on a shelf that you can't sell is no good to you. Stock sold and the money in the bank is what's good to you to help you pay your bills. When you've got the cash coming in, you've got a clear understanding of how you can shell out that cash flow to the critical suppliers. Then you make your commitments to those suppliers that you understand. And I suggest you try to only make one commitment to them, and that's the commitment that you're going to be able to admit to and follow up on. Don't make commitments that you're not going to be able to commit to, because that will only embarrass your club and embarrass you. So all your planning of how to stabilise your business and the communications you have with your stakeholders, make sure it's on the most conservative of all assumptions, not the most aggressive of all assumptions. Now, each of your clubs and associations will be different beasts. So I can't give you one straight strategy issue of how to redesign your cash flows. But what I would like you to think about is to look for one or two big ticket items, because you can waste an awful lot of time trying to make a whole raft of changes, 20 changes within your organisation to create a small amount of cash flow, when really focusing all your efforts on one or two can deliver the necessary gains in cash flow without taxing your ultimately volunteer member services that are there to try to help your organisation go around. So focus on those one or two changes to your business that might be, or your club, that might generate the most cash returns. How are you going to do that? Well, it's collaborative thinking. It will be the way to do it. I would suggest that the treasurer or the president gather together the committee members and any other stakeholders and say, okay, team, we need to work out how we're going to trim $1,000 or $2,000 from our budget, yet still deliver the same services that we need for our players to be able to play their game, and groupthink. No suggestion that would be made would be a silly strategy until it was considered. So brainstorm. Think about the ways that you might well be able to save money, and then strategize. Every suggestion that comes up in terms of impact, is it a big impact or a little impact? If it's a big impact, that's probably a strategy we're going to think about more than the little impact strategies. The implementation, is it a hard strategy to implement or a difficult strategy to implement? If it's a difficult strategy, probably moves on to we'll consider that later. But if the strategy is easy to implement, we might give that one a second consideration. And then a strategic fit. Is the strategy that we're suggesting still consistent with the strategic objectives of the club or association? If it doesn't, you really need to discard that. So therefore, after that groupthink, that brainstorming session of where we're going to find changes within our organisation, you can focus then on the ones that have the greatest impact, that are easy to implement, and don't mess with your strategy. So that's going to be the real way that you'll be able to find the restructuring strategies and the redesign issues that are going to keep your club in front of its cash flows. In all of that, it's a strategy discussion that I've talked about. Understand the why. Why does your club exist? If you have that in mind, then it makes it easier to discard those strategies that are not consistent with the why. Okay. And as I said, eliminate the distractions for those low items that don't achieve the desired returns. In terms of cash generation strategies, you're going to need to work through how to get more cash through your books, and I've given you a nice array there of where you can talk about and look to find more assets. More cash flow. I've already talked about the selling surplus assets or stock. No point having beer that's all about to expire. Sell it, get it out, and then refresh it with more stock that you can feed into the club when it's needed. Renegotiating with suppliers. I want to just mention that one a little bit more. Insolvency is, can you pay your debts as and when they fall due? The best way to extend, or the best way to make sure that you can comply with that definition, if you can't pay your 30-day bill on 30 days, is talk to them and renegotiate. Have the discussion with them. It's not an easy discussion, but we're working through, and the discussion will go along these lines. We're working through our COVID payment plan, and we're getting on top of our cash flow position. But your bill that is due at the payment of next month, we can't pay at the end of next month, but will you accept 50% at the end of the month, 25% halfway through the next month, and 25% halfway through the month after that to clear off your $100 bill that might be outstanding to you? If they say yes, communicate that in writing, and all of a sudden your debt that was due and payable at the end of the month is not due and payable at the end of the month. It's due and payable on renegotiated terms. That will really be the only satisfactory way that I think as a board member you can say, can we pay our debts as and when they fall due? Yes, I have, because I've renegotiated them. I've renegotiated them with confidence because I've got a cash flow budget behind it that's had regard to our cash coming in and our rationing of the cash going out, and I know that we can meet those commitments. Landlords, many of you will have councils, etc., as your landlords. If you need some more time, talk to them about the costs of being in the locations you are. There's a couple of links there that I mentioned before for government grants. Have a look for those. I don't think that there were any, when I last looked, any current working capital funding resources available, but keep looking at that website. Okay. In terms of performance, I've talked a little bit about the brainstorming and the way to improve your performance. I want you to start to think about performance in terms of and getting creative about how you can create revenue into your business. consultants, management consultants like McKinsey and Co, they always like to say things in numbers of 7. What are the 7 ways to market that you can improve your business by? And 7 is a sexy number. You may not be able to think of 7 new ways to bring more money into your club or association. You might be able to think of 3 or 4. There are 3 or 4 that you didn't have before, and work on what those might be. I want to very, very quickly give you an example of 7 ways to market for a restaurant, just as an illustration. And then you can use this thinking to help an understanding of, can we replicate this in our own clubs? So a restaurant, how many lines? And I've said 7. How many lines of revenue can you be? Well, let's think about it. Bums on seats. Well, that's easy. You're there. Takeaway, Uber Eats. There's 3. There's a whole pile more to go. So how more ways can we get money into a restaurant? So you could be other items like our chef comes to you. I've certainly seen a local restaurant in the midst of catering, in the midst of COVID, where we had a little dinner party at home and the chef came out to us. Cooking courses. There's another one. Now we're up to 5. What else might be to you? Selling your own produce direct. So you might have a restaurant that has a particularly wonderful relationship with the gherkin supplier, or preserves the gherkins beautifully. Why don't you sell the produce? Not only are you therefore selling your dinners and coffees, but you could also buy our preserved gherkins. And the last one, and this happened in a restaurant that I was really pleased did quite well through the COVID, where it's a family friend restaurant. They found a way to sell wholesale. So they spoke to their local IGA and said, can we put takeaways, or effectively takeaways, into your shelves? There's 7 ways, wholesale, all the way from wholesale to bums on seats. So there's an example of how restaurants can, and you will have heard this many times, pivot their business. That's an example of how you can pivot your business. In terms of creating a cash flow, it really is, and I've been talking about this in previous discussions, it is the cash flow redesign needs to focus on how we can eliminate costs, reducing overheads, and improve revenue. I want to talk to you about cost elimination. Okay, when I talk to businesses that are working through their restructuring plans, I say the easiest way to think about costs is to think of them on 3 levels. The costs that you must have, the costs that would be good to have, and the costs that are a luxury to have. When you're working through your restructuring plan, you're going to focus on your budget will only have the costs in it that you must have, those that are essential to supply. Those that are good to have will feed in or out of your commitments that your club can make to suppliers based upon the strength of the cash flows going forward. Those costs that are a luxury to have, they'll be the ones that will be eliminated and probably reintroduced next year when hopefully things are an awful lot better. I've talked then about cash flow strategies. I won't spend a long time on this. This is a bit of but all I want you to look at is on the graph at the bottom, the forecast cash flows. This was an example of a hotel that I had done some work with, where all of those assumptions can be rated on the most likely combination of assumptions to work through to those that are probably least likely to work. I would like any commitment that you make in your cash flows to be based upon, so any commitment that you make to a creditor to be based upon the worst case cash flow scenario that is there. There are a whole range of stakeholders. These, when I talked about counterparties that you need to be able to deal with and have negotiations with, the stakeholders, the key ones really are here on the side. The difficult thing that I've said to you is if you have to have a negotiation to a stakeholder, it's a tough conversation, but it's best done as a face-to-face conversation. This is, I'm the president of this club. I'm sorry, my club can't make the commitment to you this month, but the commitment is that we can make it next month and next month, get that commitment done, and then make the commitment confirmed in writing, and then you have a renegotiated payment plan. Ignoring your problems only creates problems, okay? So it's a tough thing to do, and sometimes it's not always pleasant sitting on a committee when you have to make some tough decisions, but negotiations need to be done face-to-face. This is my last slide, which in a graphical form. highlights what it is that I've just described with you. I talked about at the start tallying up the creditors, and you'll get that immediate impression of can they managed or if they can't be managed. Now, Vas talked about in his presentation some of the external administrations, the liquidation aspects of it that are sitting down the right-hand side of that slide. That's not the purpose of my conversation today. My conversation has been all on the left-hand side of the slide for me as to how you can survive in your business. And so that starts with the cash flow. When you form the view that your creditors can be managed, work out the strategy of how to do it. With a cash flow, that layer down of boxes, government assistance, business improvement learnings, business efficiency learnings, help you combine together to create a workable plan that you feed back into that cash flow to give you on the board confidence that we can work through those problems that can be managed. When you're happy that you have the right combination of monies coming in, business improvement ideas, business efficiency ideas, talk to your stakeholders and renegotiate. I've said you probably only get one chance at a renegotiation. Pushing it 2 times is probably pushing the friendship. If you have to go back and renegotiate a 3rd time, then there's a problem with the planning that you've had. So you're probably not viable in the first place. Good luck. I hope that decision tree brings together the slides that I've spoken about to help you understand how to avoid meeting me in my capacity as a liquidator. I'm always happy to help you as a business saviour if I can.
Great. Thank you, Andrew. There is the question is from
Do we have a sample constitution? No, we don't, because it depends on a number of things. It depends on whether your membership is confined to individuals or whether it can include other organisations. It depends on whether or not you have members at all. There are some associations who don't have members. It depends on how your board is structured, whether they're all voted in by the general members or whether the board has some board-appointed committee members. I mentioned that that's an increasing trend. It depends on whether you have proxy voting or not, and it depends on the nature of the association. Some associations do some things in some spaces where they need to have particular provisions in their constitutions. So there is a model constitution on the website for the Consumer and Business Affairs. The one thing I would say is not to use that one. It's just awful. It does. We've done sessions before on what not to do with the constitution, and that model constitution does just about everything that we say shouldn't be done in a constitution. But we can prepare one for you. Deeds of access and indemnity, we can help with that too. As I said, the constitution really needs to be tailored to fit the association and reflect what it's doing. Lots of the provisions in them will be fairly standard, but there's always a percentage of about 30% which is really tailored to the arrangements. But certainly feel free to reach out to us for having a look at your constitution. If that's what you need doing, we would always look at a constitution for no cost and then work out a time frame and a cost estimate for giving you a new constitution that does what you need. And we can also help with the deed of access and indemnity.
Any more questions?
I can't see why we can't available.
Yeah, I think it is being recorded, so we can. I think we can. Yes.
I don't. I'm sure that can be done. We're just not the
computer literate.
not the technically minded that would facilitate that. So we'll arrange for that to happen. And let all of you who have participated today to be able to access the slides and the recording probably too.
Yep.
Put a comment in chat.
We think we've got all the comments.
Yeah.
And Andrew Robertson. I think Andrew and we spoke on the phone earlier, but we can't seem to find your comment. Anyway.
It's in chat.
Yeah.
It's chat. I can't see chat.
We can see Q&A. We're actually having trouble finding the chat, Andrew. Hang on. You had a chat just then, more chat. Got two things in chat.
I'm happy to do more in-depth presentations for sure. So yes, certainly. You can contact me via VAS. You've got his details. Happy to help.
And I can see another question from Jess. Can the public officer also hold another position? Yes, in fact, my view is that the public officer should be someone that's on the board. It shouldn't be someone like a CEO or a business manager, because a public officer is basically the person who might get notices from the tax office or from CBS, who administers associations, or even someone who might be wanting to issue proceedings against the association. And so it really ought to be someone on the board to make sure that those documents which are potentially important are brought to the attention of the board. Some of them will just be really routine renewals and things like that, and they can be, once they've been checked and read, they can be given to an employee or member of staff who might attend to the admin. But I think it's actually important that the public officer be someone like a treasurer or a secretary, so that if it raises an important issue, that it can be made sure that it's brought to the attention of the board and not just either ignored or covered up. Yes, there's no problem with them being a public officer. In fact, I usually say that the public officer ex officio is the secretary, or it could be the treasurer. Yes, a lot of what the public officer does is pretty boring, but for the reason I just mentioned, you just need to make sure that if there is a letter from the ATO that's threatening, or a letter from CBS that says we don't think you should be carrying on business as an association, we think you need to restructure, if it's addressed to someone on the board, then it's at least brought to the board's attention. If it's not, if the role is given to somebody else, there's a danger that things aren't dealt with properly. But even if you have that, you can still delegate actually dealing with the more mundane notices to a member of staff. But I do think it's important to, I do think it's very important that you have a public officer, someone on the board. Next question. They are allowed, an incorporated association is allowed to conduct business in other states if it gets what's called an Australian registrable body number, which is like an ACN or an Australian company number, but for other entities. But that doesn't protect the committee members. All that, the reason for that requirement is just to make sure that the registered office and the officers are on a public database so that they can be sued in another jurisdiction. It doesn't actually deal with the risk that if you have employees or you hire premises or lease premises, or if you provide goods or services or do anything in another state, that increases the chance that you could have legal proceedings issued against you in that other state. And if an association is or committee members have a claim made against them, for example, in Queensland or New South Wales, Victoria, where they're only incorporated under South Australian Act, the Victorian courts will not look at the Associations and Corporations Act of South Australia. They will look only under their own state act. So although if you've got an ARBN, you are able to carry on your activities outside South Australia, it's extremely unwise for you to do so, which is why my last slide said if you do any activities outside South Australia with any degree irregularity, then you should consider restructuring to a company. And that's something that I actually do a fair bit of for associations.
I think we've answered Andrew's.
Okay.
Yep. Any more questions?
No.
All right. Well, thank you very much, everybody. Thank you, Johanna. Thank you, Andrew, for joining us today. Hope you all enjoyed it. And if you got any other questions, please pass them through the LGA and we'll see what we can do. Thank you.
Thank you.